You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 6th day of January 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, just point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live on YouTube at youtube.com/CFRN during this broadcast. Let's open with a word of prayer. Heavenly Father, we thank you for all of your many blessings in our life, for your mercy and for your grace. We ask, God, that you forgive us for the times that we have worked so hard to be self-sufficient, forgetting our needs for you, living independent of your Spirit. Forgive us for letting fear and worry control our minds, and for allowing pride and selfishness to wreak havoc over our lives. Forgive us for not following your ways and for living distant from your presence. We confess our need for you, fresh, new, and again. We ask today that you would make all things new in our hearts, in our minds, and in our lives for this coming year. In Jesus' name we pray. Amen. All right, happy Wednesday. Let me give you the numbers from around the world. These are the cash markets, the indices, starting here in the U.S. Currently, the Dow, which put in a new all-time historic intraday high today. The Dow's currently up 473 points. That's a gain of 1.5%. NASDAQ up 62 points. S&P 500 up 43 points. That's a gain of a little over 1%. And the Russell 2000 also putting in new all-time historic intraday highs today, up 77 points. That's a gain of almost 4%. In the commodity basket, crude oil up 90 cents, trading 50.83 last. Now that's a gain of almost 2%. Now with crude being up 90 cents on the session, it's a good time to remind you that if you are holding one crude futures contract and price goes up $1, we're 10 cents away from that on this session. That means $1,000 to you, $1,000 per contract traded. Gold, on the other hand, down $44.70, trading 1909.70 last. Now, that's a drop of over 2%. Silver down 63 cents, trading 27.01 last. That's a drop of over 2.25%. In the Asian markets at the close, Nikkei down 102 points, Shanghai up 22, Hang Seng up 42. And in the European markets at the close, FTSE posted a gain of 229 points, that's 3.5%. The DAX rose 240 points, 1.75%, and the CAC rose 66 points. That's a gain of 1.25%. That gives us a mixed day in Asia, a green day in the UK, and it is a big green Radio Wednesday here in the US of A. With that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll come back. We'll go over the Concierge Trade Alerts, the Logic 247 alerts, talk about market structure. We'll look at the big picture on the daily chart, and of course, answers to your questions. So Michael, if you're ready, you can take it away. And if you're not ready, I'll go to the daily chart. Okay, we're going to go to the daily chart. Daily chart. Okay, this is the all-time historic intraday high. Put in on the Sunday-Monday session, that high, 37.73 1/4. The all-time historic closing high, put in last Friday, or last Thursday, December 31st, New Year's Eve. The closing price, 37.4875. Our highest weekly trading zone for last week was 37.50/51, and the intraday high, New Year's Eve, 37.53. We've been talking about the big picture dynamic bearish engulfing candle. This bearish engulfing candle engulfed 1, 2, 3, 4, 5, 6, 7 sessions. Took us all the way back to this day where we reached below the BBC. That just stands for bull bear cross. Let me refresh this chart. There we go. Okay, so we've traded above the 50% Fibonacci price extension. It's this yellow line. We are approaching the all-time historic intraday high. High of this session, 37.66 and a quarter. All-time historic intraday high again, 73 and a quarter. If we take out the high from New Year's Eve, then the next spot that we will look for as resistance overhead, 38.04, that would be the 62% Fibonacci price extension. Our highest weekly trading zone for this week is 38.32/38.33, 37.78/79, right there, 78.79. That's the next weekly trading zone overhead. After that, we've only got one more above us, and that's it, 38.32/33. Now, I said BBC, bull bear cross. What that means is when price on any time frame, any market, could be crude oil, could be pork bellies, could be a 1-minute chart, could be a weekly chart. We're on the S&P daily chart right now. When price closes above the BBC, we anticipate higher prices. When it closes below, we anticipate lower prices. We closed above the BBC on November the 4th. We've remained above it, with the exception of intraday, December 21st, and then intraday New Year's Eve, January 4th, yesterday, and today's session, we dipped below it, but we expect when price drops to the BBC, we expect it to be good support. And so even though we spiked it here, it was good support, touched it here, good support, spiked it here, support, support, and today's session, beautiful support. We bounced all the way from the BBC at 36.92 up to the high at 37.66 and a quarter. Michael, are you there? Now, I had some audio issues earlier. Somebody put something in the chat box. Let me know if you can hear me. Maybe he's talking, I can't hear him. I would be able to see his charts, I would think. Chat box. Put an X, put a Y, put a Z. Check mark. How you doing? Something.
Hey, man.
There he is. All right. It's all yours.
Okay. All right. Let me grab it. I had trouble getting in again. I had trouble getting in this morning, too. I don't know what's going on with this.
Crazy. Crazy stuff.
Craziness. Insanity. All right. So you guys are looking at my screens, and I put up the spreadsheet, and we'll go over this to start with. Okay. Here we go. Good afternoon, everyone. Today is Wednesday, the 6th day of January, 2021. As I just said, it's the 6th day of January 2021. Today I made 4 ticks in crude, 50 ticks in gold, and 27 ticks on the ES. That put us plus 877.50 on the morning session. And today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 17 trades this morning. Okay, there was a lot of opportunity today. There was a lot of chop, but there was a lot of opportunity. And we'll get into it all here in just a minute. So on the month now, we're at $1,677. That's over 3 trading days, averaging $559 per contract per trading day. I am now in my 216th consecutive day of getting my goal. I don't know what to do about this. Oh, you know what? That's better. Third consecutive day of the year getting my goal. And down here is basically the same information. It's on the year, 1,677.5, averaging 559 a day, and third consecutive, third day of the year. Okay. Now, if you have not taken the free trial with us, go to the homepage at CFRN.net. Right here it says free 5-day trial, no credit card required. Click on that, and it will bring you to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, and your phone number, and you tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit that send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't, excuse me, if you don't click that link, well, then you don't get the free trial because we don't know you. We don't know you took it, okay? Okay, let's get into what happened. We'll start with gold because we had a lot of trades on gold today. Let's see, 1, 2, 3, 4, 5, 6. We had one break-even trade on gold, I think. And every other one made a little bit of something. Now to get up to 56, you know, pretty much had to have something going on. All right, so the markets opened up, and there was some good stuff in the pre-market right here, or right as the markets opened up, there was some good stuff right here. And then it tried to flip around, but it didn't make it. And then it finally did. And there was one there and one there, both which would have been winning trades, and another one right here, which would have been a winning trade. A short here and a short here, which have both been winning trades. And I must have been doing something else while all that was going on. I think I was trading the ES. I was really focused on the ES this morning. Even though I got 50 ticks on gold, but 30 of that was one trade. There was a short here and a short here and a short here. And this was our break-even trade. So this would have been a break-even. This would have been a little bit of profit. This would have been a little bit of profit. This could have been like, this right here could have been about 8 ticks probably. And then we had that break-even trade. And then getting into here, looks like it wants to give us something, but it didn't. And right here, we took that 30 tick trade right there. Okay. That was a trend line trade that we took in there. There was a short right here that I missed. It was a nice trade. Triggered right after the crude inventories came out. A long here that I missed, that would have been profitable. A long here, I picked up, what did I pick up on that? 6 ticks to put me at plus 36. Then another long here. I picked up 1 tick to put me at plus 37. Then a short here where it looks like I picked up a tick, but I didn't mark it. Then here we picked up 10 more and put us at plus 47. Here we picked up 2 more to put us at plus 49. Okay, I did mark it. That 1 tick over here, I didn't mark it down in here, but we got 1 tick there that had put us at plus 48, and then we picked up 2 ticks to put us. I don't know what happened exactly, but anyway, we ended up with plus 50 on the morning session, and during the break, let's see, there was a shorting opportunity there. Another one right there. And another one, nope, not there. Flipped around, started to give long opportunities, nothing there, nothing there. A long right there. Flipped around, started to give short opportunities. 1 right there, that would have been a break even. And that was about it for the gold this morning. But there was plenty to be had. Okay. On the euro, we actually traded the euro on purpose today. And it figures. Let's go back to the beginning here where we started this mess. Okay. Our first trade on the euro I think it was right here at 944, something like that. I think it was this one, or it might have been this one right here. And it stopped me out. So we picked up 4 more ticks right there. This put us at -8, this put us at -4, and this put us at break even on the euro. There was a short here that I missed that I was looking at, but then I got distracted by something else. I ended up missing it. There was a long here that I missed, and nothing during the break. Okay. So that was that. Crude oil. Okay, we traded a little bit of crude today. Now we had crude inventories come out, and it was a big miss. Big miss to the positive side. Okay, but it really didn't do a whole bunch to the price. All that stuff's pretty much built into the price ahead of time, based on the API numbers that come out yesterday. But our first trade here was a break even. Then we missed that long. This would have been a break even. This would have been profitable. And we had one more trade in here where we picked up 4 ticks. I don't know where it was. I think it was right in here. No, it wouldn't have been there. Would have been there. We had one trade in here where we picked up 4 ticks. It might have been here. It looks like right here to here. But we picked up 4 ticks, and then we had a break even. And that was it on crude, really, on the morning session. There wasn't a lot to be happening there. Now the ES was moving all around. Now if I bump the ES out to a larger time frame, I'm sure Dwayne's going to go over this in a little while. But you see, it just wanted to go up this morning. It just wanted to go up and up and up and up and up. And so I was trying to catch the pullbacks on it, and I did pretty well with it. We placed 6 trades, and 1, 2, 3, 4 of them had positive results. So we had a couple of break evens, but we'll go through what we did do, and what we didn't do. Okay. Now our first trade on the ES is where we got our goal for the day, and that was right here. Picked up 8 ticks right there. Okay, now I had missed this trade, which would have been a break even, and this trade, which would have given profit. I grabbed this one, which gave us the goal for the day. Then I was writing it down when that one happened, which would have doubled the goal for the day. I missed that, would have been a break-even trade. And it went up to this weekly trading zone, then it continued up to the next weekly trading zone. And then it started consolidating. It was getting really messy in there, so I left it alone for a little while. Then we broke away from that weekly trading zone. And here we picked up 6 more to put us at plus 14. And here we picked up 7 more to put us at plus 23. And we missed that one and that one. This would have been a break even. This would have been profitable. We had a break even trade there. And on this one, we picked up 4 more to put us at plus 27. And that was where we ended it. And then we had another break even, but that was where we ended the actual trades that gave us results for the morning session. It was a long trade here that if you stuck it out, you would have made money with it. And I think I was telling everybody where it was going to go, and it did go there. But if you're not in the live training room right now and you're a partner, and you may be having difficulty, you should really get in there, because I'm giving more information. I'm telling you more information that I'm seeing that you're not seeing, more than likely. And like maybe this week at the end of the week, we'll do an open house again, and you can all come in for a day and see what I've been doing differently. I mean, I'm trading the same trades, the same trade setups. I'm just guiding you through the trade more than I used to try to guide you through the trade. Before, I used to do it mechanically, and now I do it mechanically still, but it's easier for me to see targets now. Well, I'm doing things that I've always done, but I'm saying it out loud. And before, I used to just think it because I thought it was too much information, but it turns out it's not too much information, and a lot of people like it a lot, and it's really helped a lot of guys. So anyway, if you're not in the room and you want to be in the room, we'll probably do an open house Friday, and you can come in Friday. Okay, so let's go back here. Valerie, there was something I wanted to ask you. Okay, I'll put it in Telegram. Go back here. Okay, now if you haven't taken the free trial and you want to take the free trial, go to eminitrainingschool.com, or you can go to CFRN.net, our homepage, and click on free 5-day trial. It's going to bring you to this page. On this page, all we ask for is your name, your email, your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, then you're not going to take a free trial because we don't know you took the link. I mean, you don't know you took the trial until you click that link. Okay, back to the spreadsheet for a few minutes. Again, if you're going to read this, because you got to read all the CFTC risk disclosures down at the bottom. Today is the 6th day of January 2021. We made 4 ticks in crude, 50 ticks in gold, and 27 ticks on the ES. Put us at plus 877.5 on the morning session. And today it took 7 minutes in one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 17 trades. So on the year now, we're up $1,677.50. That's on the year and on the month. That's over 3 trading days, averaging $599 per contract per trading day. This is the year and the month right now. Okay, it's been 216 days since the last time I did not get my goal for the day. And we are now on our 3rd consecutive day of getting our goal this year. Now my goal is to go all year and get my goal every day. I know that's quite a lot, but Valentine's Day this year falls on a Sunday, so I won't be distracted on Valentine's Day. That was the last time I didn't get my goal. As I said, they're the same thing as the monthly, 1677.5, averaging 559 a day. That's over 3 trading days. Okay. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park.
Recap of the recap.
Okay, today it took 7 minutes and 1 trade to get to $100 per contract.
Good job.
Thank you.
I mentioned this yesterday, guys. I think the day before. I mentioned it again. You know, our 24/20 blueprint, designed to help you go from 1 to 20 contracts over a period of 24 months. In order to go live, start trading live, the plan, the goal for you as you're just starting trading in the simulator, as you're learning the strategy, is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Now, we teach aggressive risk management in the room. If you hit break even 9 times in a row and then got your 2 points on the S&P, you're still positive. You're still net positive, net profitable on the day. 9 break evens, 1 2-point trade. Now, obviously, you're not as profitable as the guy who got it in 1 trade or 2 trades or 3 trades or 4. But hopefully, just that concept, that idea will take some of the pressure off of you, because we all know how deeply disturbing it is on a gut level when you get stopped out on that first trade of the day. And then when the second one gets stopped out, sometimes even the third one, there is an unequal distribution of profitable and unprofitable trades in a business that's built on probability. The way to succeed as a trader is not to find some way to never get stopped out, because that doesn't exist. But when you learn to manage your risk and you understand that using a definable edge will help you be on the right side of the street so that you can put the probability in your corner. I don't like gambling analogies, but we all know that when people go to Vegas, the house ultimately wins, because when they created the rules by which that particular gambling establishment runs, the house has the odds in their favor. It really stuns me that so many people flock there to try their hand at these games of chance when they know that the odds are against them. So our 24/20 blueprint, it also helps you write your business plan and your trading plan. This is where you take our definable edge. You create your own house rules so that probability is in your corner, not working against you. You make the rules. Now, we teach you the mechanical strategy every day from 9:30 a.m. to 11:30 a.m. Eastern. That's exactly what Michael is focused on. Everything we do is based upon the simple underlying principle of how markets work. Now, along with teaching you how to find opportunity in the market via the room in the morning, we also provide alerts around the clock so that you have real-time examples to work with as you're learning. If you wanted to become an auto mechanic, and you could go to a school where they taught you everything you need to know about being a mechanic via textbooks and videos, and perhaps watching an instructor, take apart an engine and put it back together, you would probably learn quite a bit. But compare that to a school where, along with the textbook and the video, they put an engine in front of you. And as the instructor is disassembling that engine, you're disassembling your own engine and then putting it back together again. Who do you think is going to become the better mechanic? The one that just learns from the textbook and from videos and from watching the instructor? Or the guy who actually gets his hands dirty and learns how to take an engine apart, put it back together? If my car is broke, I'm going to take it to the guy who's actually taken an engine apart, put it back together. So there's two analogies: gambling, which I don't like, and the mechanical analogy, which I stumbled across or thought up about a week ago. And I think it really helps to explain the purpose of the alerts in the grand scheme of things. Now, in the beginning, you're trading on the simulator in the demo account. Your goal is to put together those 10 consecutive days in a row before you go live. So these alerts are there for you to trade. But when your phone sounds the alarm, or your tablet sounds the alarm, your PC or Mac sounds the alarm, it's not a call to trade. It's a call to look at your chart, because opportunity is presenting itself. So never trade an alert just because it's an alert, because you don't learn anything that way. Our goal is to teach you how to find opportunity yourself. So you get the alarm on your phone, your tablet, or your computer. You go to your charts. You study the chart. We want you to understand the entry, the target. I teach you how to set your stop loss, and then you trade that thing. And the more you repeat that, the more times you take the engine apart and put it back together, the better you get at it. Pretty soon the day comes when the alarm sounds. It's not alerting you to opportunity. You've already seen the opportunity. You're already in the process of putting the trade on when the alarm sounds. And you go, uh-huh. It goes from being an alert to being more like confirmation. Now, we start Sunday night, 6 p.m. Eastern. That's when the global futures market opens. Because at 7, 8 o'clock Sunday night, that's when Asia starts trading stocks. And futures track the stocks. So futures track the stocks through the Asia session. Then London opens at 3 a.m. Eastern. Futures continue to track stocks right up until the Wall Street open. Futures continue to track stocks right up until 5 p.m. Monday afternoon. Markets go quiet for 1 hour, reopen at 6 p.m. Eastern, and that becomes the Tuesday session. And that process repeats itself all week. So far this week, we've issued, since Sunday night at 6 p.m. Eastern, we've issued 49 alerts 3 of them never triggered. Still waiting on the results of 3 that were just published this morning. So we've had 43 actionable alerts. 2 have been stopped out based on not risking more than $300 per contract per trade based on market structure and a very simple 3-step methodology that I teach all of our traders. These alerts could come out at 2 a.m. or 2 p.m. You never know when opportunity will present itself, but we alert you to the opportunity. Now you might say, gee, I don't want to be trading at 2 a.m. in the morning. That's when you should turn notifications off on your phone so that your phone doesn't keep you awake all night as opportunity presents itself. And in the morning when you wake up and you're ready to start trading your day session, whether you're in Asia, the UK, or the US, whenever your day session is or whenever your trading time is, maybe your trading time's after you come home from the day job. Turn your notifications on. Fresh alerts will flow in, but also you have access to all the alerts that were issued when you had your phone turned off. Why would you want those? Because important prices and important areas are almost always tested. Once an alert triggers, there's a greater probability of it triggering multiple times than not. Now, when we have a strong directional day, you might only see one trigger in a market, a day like today, but on a typical day, those alerts will trigger, price will retrace, get back below the trigger again. An average day, we'll see an alert trigger 2 to 3 times, and on extraordinary days, we might see an alert trigger 5, 6, 7 times. So, those are the Logic 247 alert recap. Now let's take a look at individual alerts. Last week, week 126 of Logic 247, we issued a total of 59 alerts. It was a 4-day week. We had 46 actionable. 5 of those were stopped out. That's 11%. What we've averaged over the last 127 weeks now is that 20% do get stopped out. So we had a low number last week. So far this week, a low number. But the average, 20%, based on not risking more than $300 per contract per trade. Now in the live training room, the risk is 8 ticks on every trade. Market structure, not taken into account. It's just a 8 tick. We're teaching you the strategy, okay? And we're teaching you the importance of always having a hard stop on every trade. If you decide to move beyond the mechanical trading methodology and go into the discretionary model, you're still using the same underlying principle. The only thing that changes is the time frame and the amount of risk that's allocated to each trade. So Sunday night, we started at 6 p.m. Eastern, as we do every Sunday night. First alert out of the gate, as it is most Sunday nights, was the S&P. It was a long with initial target, potential resistance, second target, third target, fourth target. At the time of the recap, we've traded above this, of course, but at the time of the recap, the market had made $787 per contract available. So if you're trading if you've earned the right to trade 2 contracts, then it's $1,400. If you've earned the right to trade 10 contracts, then it's almost $8,000. But you start in the simulator in the demo account. Got to put together those 10 consecutive days in a row to prove to yourself that you do understand the strategy. The blueprint then gives you the green light to go live with 1 contract. Now you've got a different goal because you're trading real money. Your goal now is to increase your account balance by $2,000 so that you have funds available to add a second contract. The blueprint will notify you when it's time to add contract number 2, number 3, number 4, number 10. You only increase your trade size with profit you earned in the market. If the blueprint says, hey, it's time to add contract number 3, and you don't have profit available in your account to add a third contract, You should be booking a one-on-one mentoring session with myself, with Michael, so that we can go through your trades with you and help you understand what happened. It's possible that you missed something in the strategy. It's possible that current market conditions, or at the time you were placing those trades, were not conducive to trading. There are times when the market goes flat and the best trade is no trade. Our strategy and indicators do a fantastic job of helping you find high probability, low risk trade opportunities, but they also, and probably this is an even more important job, is they can teach you when to stay out of the market. When those indicators go flat and price is struggling sideways, you don't want to be in the market. Everything we do is a trend trade. The alerts are based on the trend is defined by a 30-minute chart. In the room in the morning, trend is defined on a range chart, a 4-tick range chart. Now, it's not a 4-tick chart. That would be too fast to trade. A 4-tick range chart simply means that every candle in every market is exactly 4 ticks tall. And we all know that the S&P, 4 ticks equals 1 point. So we started out Sunday night with the S&P, on to the Dow, to the Russell, to the NQ, to crude oil, to gold, to silver, to BTC, to GNG, which is natural gas, to 6B, which is the British pound. And then here's a euro that I screwed up the numbers on. Australian dollar, back to the S&P, back to the NQ. And that was all Sunday night. Wall Street hasn't even woke up for the week yet. Coming into Monday morning, back to the S&P, no trigger on the Dow, Russell, NQ, stop out on crude oil, long on gold, long on silver, short on crude oil, S is sell, T is initial target. On a short, your second target will be potential support. The final trade to target will be the weekly trading zone. On a long, initial target, your second target will be potential resistance, third target, fourth target. Here's crude, short on the Dow, long on the Dow. Okay, now, the beautiful thing about being a futures trader is that you can be long, short, and even long again in the same hour if that's what market conditions and market structure calls for. Perfect example, short the Dow, hit the target, long the Dow, hit the target. Short the S&P, hit the target, long the S&P, hit the target. Short the NQ, long the NQ. Russell, long, Dow, long, S&P, long, stop out on silver. Long on gold, long on crude, long on the NQ, long on silver, long on the S&P. These are all, when you're trading with us, even when you start brand new in the demo account in the simulator, these alerts are flowing out so that you have living, breathing examples to work with. When the alert sounds, you go to your chart, you're looking at the alert, it hasn't triggered yet. You see the trigger. I want you to understand why that's the trigger, why that's the initial target, why that's the next target. And you have access to the 24/7, 365 discussion group so that if you don't understand, you can ask questions. Hey, I'm looking at alert number 6095, and I'm not sure why 3675 is the third target. If you ask the question, either myself or one of our other traders who all learned the exact same strategy will answer the question for you. Short on the Dow, short on the NQ, long on crude, short on silver, long on the Russell, which brings us to today, January the 6th. The Dow and the S&P and the Russell have all put in new historic intraday highs today. Long on the Dow, long on the Russell, long on the NQ. The ones we're still waiting on is a long on crude, long on the S&P, and a long on the Dow. We have another type of alert called the Concierge Trade Alerts. That was our original alert service. And what it does is it gives you forward guidance for the entire session. And let me drag that up to the screen, and you can actually grab a screenshot if you'd like to. So, Tuesday night, last night, I got them out 1 hour after the Globex open. This is forward guidance for the entire session. Forward guidance for the entire session. So once these alerts come out, if price starts trending up towards 37.36, you're going to be looking for long trades. When price gets to 36, you either want to be long and or only looking for longs above 36. If price drifts down to 36.92 in this example, you want to be short on the way down and or short at 92, or only looking for shorts below 92. This keeps you on the right side of the street based upon the current prevailing trend as defined on a 30-minute chart. We cover the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now we've already had a look at the daily chart, and we're still pressing higher, okay, just barely off session highs. High of the sessions, 66.75. That's 37.66.75. The all-time historic intraday high, 73.25. So we're closing in on history here. If this market, and I've talked about this since the day of this bearish engulfing candle. Okay, we talked about a pullback, the BBC should act as a good support. It did. If we could get back above blue and climbing, then the potential would be for price, for buyers, to rally this thing, take out that high. If we take out that high, even intraday, even if we don't close above it, that negates the power of the bearish engulfing candle. And the bullish engulfing and bearish engulfing on a daily chart, those are the two strongest indications of a potential market turn that I know of. And this bearish engulfing engulfed 7 previous sessions. And this market is so bullish that we're on the verge, we haven't done it yet, we're on the verge of negating that powerful reversal signal. So let's see what happens between now and the end of the session. So let's go to the 30-minute chart. We look at the daily chart for guidance. That's where we see the opportunity. This is where we determine where important support and resistance lies. Then we come to the 30-minute to actually see the opportunity itself. So we traded through 37.0203, that's a current weekly zone. 26.27, current weekly zone. Got another zone in here at 38.39. And then the one you see here, that's last week's highest weekly zone. It was also the high of the year. It's not a zone this week. Now that price has traded through it, I'm going to slide this up to this week's zone, which is 3160/61. Okay, when price rises to a zone, we expect it to be good resistance until proven otherwise. This zone here at 38.39, we sliced through it like it wasn't even there. Ultimately, price will retrace back to that zone, and then, based on history, will continue in the direction of the slice. Now this consolidation, that's the most likely thing to see at a weekly zone. You see it all across here, and here, and here, and here. That's the most likely thing. When price hits a weekly trading zone, one of three things happens. Most likely consolidation. Second most likely is rejection. Okay, this is what you see here. When the candle closed, the only thing left touching the zone was the wick. Okay, so consolidation most likely, rejection second most likely, and then the third and least likely, but it happens, the slice. Think of it as fixed support and resistance. It gives our traders a tremendous edge knowing early on in the week, Monday morning, 6:15 a.m. Eastern is when the zones are published. We've published them since December 14th of 2009, over a decade. So as price was rallying up to 3760/61, all of our traders knew that that was potential resistance. The market is now in the business of proving otherwise, that it can overcome that. But we can't forget. Now, see, looking at a 30-minute chart, looks like the sky's the limit. But if we remember where we are on the daily, we know that we have incredibly important resistance. I mean, that is the all-time historic intraday high in the S&P 500 Emini Futures. When price touches that, there's going to be a reaction. Okay? Just looking at a 30-minute chart, you don't even know that dynamic exists. This is the importance of learning to use multiple time frames. Now, the next weekly zone overhead is at 37.78, which we're closing in on, 78/79. And then the highest weekly trading zone for this week is 38.32/33. Today's Wednesday. Anything's possible. So right now, the next high probability opportunity in the market is from where we are to the zone overhead. Thanks to multiple time frames and the ability to look at a daily chart, we know that 73.25 is a very important number. 73.25. Zone's at 78. So we put a little mark here at 73.25. Now, if price can get through the all-time historic high at 73.25, then the next area that we anticipate resistance, once that all-time high is taken out, would be the zone at 78. And once price gets above 78, if it can get above 78 and hold the pullback, then it's onward and upwards to 38.32. If price gets stopped in its track here at the all-time historic high, then we expect price to come back to the zone. The highest probability thing is that it finds support, consolidates, takes another run. If support on the pullback fails at the zone, then the next area for support, blue and climbing. If support fails there, the zone below, and if that support fails in the BBC, a pullback to the BBC holds more often than it doesn't. This is what I was talking about earlier. See, when you've got these indicators running together, prices, this is wide-ranging consolidation at a weekly zone. When you look at your 30-minute chart and price is above, and then it's below, and then it's above, and then it's below, and your indicators are just flat like that, this, go look at a different market. Look at a non-correlated market like crude oil or gold or silver, something other than one of the indices. Because the four indices, the major indices, the S&P, the Dow, the Russell, and the NQ, those are pack animals. They tend to trade in the same direction. They flow together. Not in lockstep. But at the end of any session, the end of any week, month, print out a chart of the S&P, print out a chart of the Dow, the Russell, the NQ, hold them up to the light, look through it, and you'll see how they track each other. Which leads to the question, well, which one moves first? Because when I see that one move, I'll trade the other one. Unfortunately, there is no one that always moves first. Okay? Sometimes it's the S&P, sometimes it's not. It can be any one of the four. You never know which one. Okay? So just don't waste too much time trying to find something that isn't there. Kind of like trying to find a way to never get stopped out. Does not exist. There's a little something in the back of our brain that tells us, there has to be. There's got to be some kind of filter, some kind of indicator, oscillator, some kind of mathematical, it got to be something. It's not possible to know the future. When God created Adam, he didn't give Adam the ability to change the past or to know the future. Period. Consistently profitable professional traders understand this. They waste no time and treasure trying to find what doesn't exist. New traders exhaust all of their time and treasure trying to find what doesn't exist. That's why, unfortunately, 9 out of 10 new traders fail. They exhaust their time and treasure looking for something that doesn't exist, as opposed to spending their time and treasure getting an education, a hands-on education, where they take the engine apart and put it back together. Take the engine apart and put it back together until they can do it in their sleep. That's the difference between the 1 out of 10 and the 9 out of 10. The 1 out of 10 had a teacher. The 1 out of 10 had somebody that said, hey, come here, let me show you how to do this. They listened, they watched, they practiced, and they learned. Now, last night's Concierge Trade Alert, which is the forward guidance, the static report that comes out shortly after the Globex Open, to be long 37.36. 37, 36. Right there. This push up before we had any real resistance. Now the initial target, 37.38, weekly zone. This is one of those rare occasions where we trade through a zone like it's not even there. Okay? Buyers were on a mission. We didn't start consolidating until we got to the next zone at 60.61. But we still don't have an exit signal. Now an exit signal, you see this step line here, is on the left side of blue and climbing. As the market, or as this move starts to run out of steam, the step line is going to cross. See how it steps up, steps over, steps up, steps over, steps up, steps over. At some point, it's going to step over, which will put this step line on the right side of blue and climbing. That's the market saying, hey, this thing's running out of steam. So on a long trade, you're watching for the first red candle that closes below the step line. That's the market saying you should really consider getting out and taking your profit here. Now, it's your trading business. You can take profit anywhere along the way. If your goal is simply to get your 2 points for the day, then you had it right here from 36 to 38. You can make all the money you want to make with 2 points a day. You can work hard to get 5 points, 10 points, 20 points. Some days will be better than other days, but there's never a day. I've watched these markets every day since 2005, and I've never seen a day when the market did not make 2 points in the S&P available multiple times. Multiple times. Tons of times. Because 2 points is the distance between this line at 37.36 and this dotted line at 37.38. In the grand scheme of things, that right there, yep, based on this chart, the way I have it scaled right now, that little rectangle, 2 points. Now, when you start, you're in the demo account, but once you go live with one contract and 2 points, that much movement is $100. When the blueprint gives you the green light to add a second contract with the profit you earned from trading one contract, this same 2-point move is worth $200. And when the blueprint says, okay, it's now time to add contract number 3 with the profit you earned trading 2 contracts, then the same 2 points of movement is worth $300. At 5 contracts, it's $500. At 10 contracts, it's $1,000. Now, if you have the patience and the self-discipline to earn your way up to trading 10 contracts and just taking 2 points a day out of the market, that puts you in the top 3% of wage earners worldwide. Obviously, if it were easy, everybody would do it. Trading is not easy, but can be simple if you have someone to show you how to take the engine apart, put it back together. And that's what we do. Okay, so from 37.36 up to 46, 10 points, up to 56, 20 points, up to 66, 30 points. And if we hit 76, that'll be 40 points. Swing high so far is 71.50. So 71 minus 36 is 35. It's 35 points. S&P pays $50 a point. 35 times 50. With one contract, this is a $1,700 per contract move. But again, it's your business, it's your decision. You can choose to be the trader who tries to get as many points a day as they can, or you can be the trader who says, I'm going to get really good at grabbing 2 points a day, and then I'm going to go live the life that God created me for. I'm going to do the things that God created me to do. This trading is just a vehicle. This trading gives me the resources to do what God created me to do, because ministry costs money. Okay? You know, maybe you're called to build orphanages in a third world country. Maybe you're called to feed the hungry, clothe the naked, house the homeless, build churches, preach the gospel. I don't know. But God knows, and hopefully you know. If you don't know, ask Him. Ask Him, God, why did you put me on this earth? And then be quiet and listen. I found that one of the reasons I had so many unanswered prayers in my life was because I wouldn't shut up long enough to hear the voice of God. He's a gentleman. Speaks in a still, quiet voice. You have to actually lean in and listen. If you do, you can hear it. We all have that little voice inside of us that uncannily, it seems as if it's always right. We should be able to learn from that. And after we spend enough years here on planet Earth, we do. Most of us. Some people never do. So, with that, we can move on to the Dow. Now, 20 points in the Dow is the same as 2 points in the S&P. Last night's Concierge Trade Alert for the Dow was to be long 30,415. Traded up through one zone, traded up through two zones. The final zone this week for the Dow is up at 31,150 /55. So we got a ways to go. This you're looking at the all-time historic high. Okay, let's peek at that daily chart. Oh, swing high, 71.5. All-time historic intraday high, 73.25. You should just watch this for a second. See, the market senses what it. If you're just sitting here watching a 30-minute chart, you might have just, what happened? I don't see any resistance looking left because you're a 30-minute chart. When you look at a 5-minute chart as an example, it's like standing on the sidewalk in front of your house. You can see to the end of the street in both directions. If you climb up on top of your house, now you can see your whole neighborhood. That's like stepping up to a 30-minute chart. If you were in a helicopter hovering over the city, you can see from horizon to horizon. It's more like a daily chart. If you had a rocket ship, that would be like a weekly or monthly chart. You can see it all. The smaller the time frame, you get tunnel vision. Okay? See, looking at this 30-minute chart, it's a perfectly fine 30-minute chart, but it doesn't give us the clarity. We knew to expect resistance at the, and it's not just because it's an all-time historic intraday high. That certainly adds to it, but the sheer fact that it was a previous intraday high, we know to expect there to be resistance there. The question becomes, if buyers can pop through it, then what? After all this, do they still have the desire to push it higher? Or do they understand that the danger, because look what happened the last time we got here. Okay, this market opened at the top of the red body. We had a green candle. We had a green candle all the way up to the intraday high. And when price reached 37.73 nobody on planet Earth was willing to pay 37.73.5. Nobody would pay one tick more. And so that green candle started to evaporate. And when price got back to where that candle opened, the beginning of the session, and traded below it, it became a red candle. It was a green candle, and it became a red candle that stretched all the way down to what at the time was the 24% Fibonacci retracement of the last leg up. At that 24% fib, buyers came in, drove it all the way back up above the BBC by the close of that session. Now, yesterday's session, we spiked below the BBC, buyers came in, lifted us. Last night, we dipped below the daily BBC, buyers came in, rallied us up. So, imagine getting long right before you hit that all-time high the other day. Well, you got stopped out. if you didn't have a hard stop, you may have blown up your account. That's why it's so important to always have a physical hard stop. Because if you don't, and the market starts to plummet, it will take all your money. Make no mistake. So buyers are nervous right now. They understand that when this thing gets touched, if it gets touched, I mean, there might be so much fear that it doesn't touch it. Because people who've been long all the way up, people who've been long for the last couple of days, do you think they're not going to take profit at this important area? They will. They will take profit. And when they take profit, sellers smell blood in the water and they pounce. So what happened the other day, when sellers saw that buyers weren't willing to pay more than $37.73 and a quarter, and what was a green candle started to become a red candle, sellers came in with force, drove it all the way down. We saw the same dynamic on this day. Now notice the high of this day was 37.23. We got 1 point higher. We got to 37.24. Buyers took profit. They had 1, 2, 3, 4 positive sessions in a row. The high of this session was 37.23. In this session, the high was 37.24. We opened here. We opened the session at 37.18 and a quarter. Buyers pushed it up 37.24, but nobody was willing to pay 37.24 and a quarter. When buyers stop buying, price begins to deteriorate. It takes financial commitment for price to rise. But for price to fall, all it takes is for buyers to stop buying. And when buyers stop buying, sellers come out of the woodwork. Like shooting fish in a barrel. Easy game, as they say. Oh, we're close. It's the high. 72.5. What's the all-time high? All-time high? Come on, speak to me. 73 and a quarter. 73 and a quarter, all-time high. We just took it out. We're at 74.75. Buyers still got the foot on the gas. They're pushing it through, pushing it through. At some point here, all it's going to take is a couple of large institutions to say, you know what? I'm good. We've started the year off with a bang. I'm taking my profit. And as one takes profit, another takes profit, another takes profit, then buyers just say, we're good. Sort of like when a school of fish turns. There's no turn signal. They just somehow all seem to do it at once. Okay? So we'll keep an eye on this big picture dynamic. You're looking at new all-time historic highs in the S&P 500 Emini Futures. Yes, there's a pandemic going on. Yes, there's a lot of crazy shenanigans happening on Capitol Hill. There's problems all over this planet. Some might call all of this irrational exuberance. But Greenspan said that at the beginning of the 90s. It was either he or somebody else important that said the 90s would probably be a decade of anemic growth. And then came the internet. Oh, by the way, speaking of the internet, I've been sharing in the discussion group a podcast that I stumbled across called Where the Internet Lives. It's a 6-part series and it's produced by Google, so it's Google friendly, but it really does a good story of telling the story of the internet. Not so much the internet itself, but the data centers behind that make the internet possible. You know, when you hold your iPhone or your new Android phone, whatever phone you have, all the incredible stuff that happens, you know, very little of it actually happens on the phone. The magic happens in these huge data centers around the world. Some of these data centers, it's a 200-acre campus. And inside of this data center, which has incredible security, in the podcast series they talk about the security, but you walk into one of these data centers and it's just row after row after row, rack after rack after rack of servers churning. Did you know that every Google search has a zero carbon footprint? Didn't know that until yesterday, but it does. Google buys a lot of wind energy and solar energy. They create their own. Well, they capture their own. When Google decides to build a data center in a small town like in Oklahoma, it's really it's like everybody in the city just hit the lottery. The guy that runs the gas station, or the filling station as we used to call it back home, the guy that runs the diner, the coffee shop, the dry cleaners, the guy that mows the lawn, the guy that fixes the car, everybody wins because this huge entity comes to town. And these small communities, they will vie. Oh, please build it here, build it here. You know, similar to when an Amazon distribution center comes to a small town. I can't do it justice, but the digital storyteller who narrates this podcast, just wherever you get your podcast, wherever your pods are cast, just search Where the Internet Lives. It'll take you to the 6-part series. All right, see what's happening? Hey, are we surprised? No, it's what we've been talking about for the last half hour. See, this is how markets work. Not just at all-time historic highs, but whenever the market encounters resistance or support. This dynamic plays out over and over again and again, day after day, and I've been explaining it on this show every day since 2005. In the beginning, it was just a podcast with audio only. Michael and I were here without video, trying to explain, what our indicators were doing and what price was doing. Now, of course, our members who also had, their own charts and their own indicators were able to follow along. But anybody that just stumbled across us from 2005 up to 2011 were kind of in the dark. 2011, we added video. Since we started producing the show with audio and video, we've now archived over 1,600 individual daily broadcasts where I do exactly what I'm doing now, where I walk you through what the market's doing, why it's doing it, and what you should expect next. See, I said earlier, you can't know the future because God didn't create the world that way. But you can know with certainty what the next high probability move is by applying logic. Once you understand how markets work, then every move that the market makes, it's logical. Remember Spock used to say, it's logical? What we just saw happen, logical. Now, I don't do this just to show off and impress you. I do this so that you understand the market doesn't have to be this unfathomable mystery. That you can actually understand it. You can learn to speak the market's language. And you can participate in the excitement without getting slaughtered. If you understand what's going on. And that's what we do. We teach you. We do 22 hours a week of group training. 22 hours a week where you get to participate, ask questions. And if for some reason you can't get your arms around it during those 22 hours a week, you can book a one-on-one mentoring session. All of our students have unlimited access to one-on-one mentoring. Each mentoring session is 45 minutes, where we go into a go-to meeting environment where it's just me and you, or you and Michael. You can look at our charts, we can look at your charts. Purpose is to, whatever it is that you couldn't get your arms around during the 22 hours, we then teach you for 45 minutes in a one-on-one session. And all of our students have unlimited access to one-on-one mentoring. Now, we do a great job of explaining it, I hope we do, during the 22 hours. But if you need additional help, it's there. Our discussion group, it's open 24/7, 365. Who'd have ever thought you could have not only somebody teach you the language of the market, but provide you with around-the-clock support? Well, that day has arrived. Actually, it's been here for a while. You just need to step up and take advantage of it if you haven't already. Imagine all the traders around the world who got long here with no idea what was about to happen. How far have we dropped? The high was 74.75, and we're at 68. So not that bad yet. Okay, this is some pretty orderly profit taking. So what next? Okay, price comes down. The step line is potentially support. Weekly trading zone, potential support. Whenever price drops to a zone, we expect it to be good support until proven otherwise. When price rises to a zone, we expect it to be good resistance until proven otherwise. So we spent, after we hit the zone and got rejected on this 30-minute candle, buyers took it back up, and we spent an hour and a half, 3 30-minute candles consolidating. That is the most likely thing to happen. And then buyers mustered the resources to, because remember, it takes financial commitment. Buyers have to put their money to work. Institutions, retail, buyers of buyers. Got us to the area. Now, this. Now, yesterday I showed this chart, and if you missed it, I want you to see it again. Or I want you to see it. You saw it yesterday, I want you to see it again. Hey, this was the high. This is a monthly chart of the S&P 500 Emini Futures. And yes, that is the all-time historic high we were just looking at on the daily chart and the 30-minute chart. This is a monthly chart. Hey, this was the run-up in the internet stocks. And then here's the dot-com crash. Boom. Price dropped far enough that once again buyers saw it as a bargain, and they drove it right back up. Important prices, important areas, almost always tested. And then we had the financial crash, or I refer to it as a real estate crash, because I think that's really, home values got so inflated, and mortgages were, if your job was bagging groceries at Safeway, and you made $8 an hour, you could qualify for a $500,000 home. You did not have to be a rocket scientist or have a major in mathematics to realize that that's bad math, bad science. That dog's not going to hunt very long. And, well, we know what happened. Houses that were selling for $300,000 were suddenly in foreclosure for $100,000. And it's taken, since 2008, that crash, it's taken until just the last couple of years for prices, for real estate prices, to get back into the same neighborhood that they were in at the height of, probably 2005, 2006. So, run up, crash. Run up, crash. This time, buyers were able to keep their foot on the gas, push us through. And look at what's happened. This line that I drew, it's an area, okay, but we're looking at 2013 here. The highs before the 2008 crash was around up in the 1500s, okay, and then we fell to 666. So in 2013, we got back above that area, and since 2013, the last 7 years, 8 now, I guess we're in 2021. Leg, retrace, leg, retrace, leg, retrace, leg, deep retracement, big leg, deeper retracement, big leg. Now, this is how markets work. At some point, just like here and just like here, we're going to reach a point where buyers aren't willing to pay a higher price. And we're going to go for a deeper retracement. Obvious areas for potential support would be these lows right here, this low here, these lows here. We've never tested this area from the upside. Resistance, resistance. How many times have you heard what was once support becomes resistance, and what was once resistance becomes support? Happens. This area has never been tested from the upside. Is that a forecast that we're going to crash? Hey, I heard this guy today on the internet. He said that the S&P is going to crash and go back to 1500. I didn't say that. What I said was important prices, important areas are almost always tested. And we see the importance of this area as resistance. I'm posing a question. Will we see it act as support? Only time will tell. God didn't give us the ability to know the future, but He certainly gave us the ability to know what the next high probability move is in the market. Very, very mild profit taking at the all-time historic high so far. Now, if price doesn't start to recover pretty quickly, those who are long this move up are going to get nervous. They're going to start making decisions to take profit. As more traders take profit, the interest of sellers gets aroused. Okay? Is it possible that there's such a bullish sentiment out there, despite the pandemics, despite the politics, that buyers can just rally this thing right back up, take out that high? If you remember nothing else, remember this. Anything is possible in the market and in life. Is it the high probability thing? No. Could it happen? Yes. What are we going to do about it? We're going to trade what's in front of us. That's what we do every day. We trade what's in front of us. What I consider where we are now, back up to the previous all-time historic high, would I consider that a high probability trade? No, I wouldn't. I think the big picture dynamic here is too great. So I'm going to keep my hands off the mouse, because we already what was the last ES? 37.69 to 37.71 to 37.78. Swing high. 74.75. Okay. I don't want to be in the market right here. There's just there's too much unanswered. Let's let the market show us how buyers are going to handle this, because they're the only thing that not only moves price up, but they're the only thing that keeps it up. Because when buyers stop buying, price deteriorates, and that doesn't take any financial commitment. So they're trying. What I would love to see is price retrace all the way back to this zone at 37.38/39. And the BBC. When price drops to a zone, we expect it to be good support. When price drops to the BBC, we expect it to be good support. Price drops, finds good support, gives us another leg to the upside. Now the distance between this zone and this zone, let's see, from 40, it's 22 points. That's $1,000 per contract move. If price comes down, finds support, and then rallies back up to this zone, that's $1,000 per contract move. Now, in the alert channel, I only issue trend trades. And the trend, that's the trend as defined on a 30-minute chart. I don't publish counter trend trades. A counter trend trade would be to say, I want to watch price get below the zone. I want to see it get below that swing low right there. And then the window of opportunity, the counter trend opportunity, would be basically right there. 37.53 down to 37.43. 53 down to 43. Nice 10-point move. The reason I don't put those in the alert channel is because I want all of our students to have only the highest probability, lowest risk opportunities to work with. And a counter trend trade does not have the same degree of high probability as a trend trade. These were all trend trades as defined by a 30-minute chart. Not one counter trend trade in the bunch. Out of 43 actionable alerts this week, we never published the counter trend. Doesn't mean that's not a legitimate style of trading. There are lots of traders out there who consider themselves contrarians. They look for the counter trend opportunities, and that's okay. There's nothing wrong with that. It's just not the path we've chosen. So if you hitch your horse to our wagon, or your wagon to our horse, I guess that's the way it goes, you'll only receive trend trades as defined by a 30-minute chart in the alert channel. Okay? And the Concierge Trade Alerts, which we went over earlier, that helps you determine what the sentiment is for the session. Let me do that again. Okay. Once this report is published, shortly after the Globex open each night, if you look at your chart and you see that price is moving towards 37.36, that gives you bullish sentiment on the session. But you also have to look for any obstacles that are between where price is when the report's published and that number. There could be previous swing highs, there could be weekly zones, right? So you know the market's trying to move higher, right? But it has to overcome any obstacles that are in its path. Just like on this move here, where price went this morning. This is the opening Wall Street candle. We went from zone to zone. Now these zones were published Monday morning at 6:15 a.m. Eastern. How could we know? It's not magic, it's not voodoo, it's a process. Welcome to the process. Okay? We went from 37.03 to 26. That's 23 S&P points at $50 a point. It's over $1,000 per contract traded, zone to zone. In order for this to happen, buyers had to overcome this resistance. See, we had a double top right here. And then for price to move from this zone to this zone, it had to overcome this resistance from this swing high. So except in the rare times when you're actually at all-time historic highs, see, right here, if you look left, there's nothing to see because price never been there before. Now, if you look left, there's something to see. And we know that as of a few minutes ago, that's probably the most important resistance you'll see, potential resistance you'll see all year. It was resistance. If price goes back up there, the highest probability is that it will be resistance again. In other words, buyers won't get through it on the first attempt. It might take several attempts. And if they keep trying and keep trying and keep trying and can't get through, they will throw in the towel. Not that they're going to, give up trading or give up the idea of being long. They're just going to sit back and let price drop to an area kind of like this. And they'll come back in. No need to bang your head against the wall. Let the market come to you. Don't ever try to force anything. Don't ever trade an alert just because it's an alert. Remember, when the alarm goes off on your phone, on your tablet, on your PC, or your Mac, it's not a call to trade, it's a call to look at the chart to make sure that you understand the alert. Once you look at the chart and you understand the nature of the alert, then you trade it. But in the beginning, you only trade the simulator, the demo account, until you put together 10 consecutive days in a row. This way you're sure that you understand the strategy, the methodology. You know how to read the indicators. You may not be perfect at it yet, but you managed to put together 10 consecutive days in a row. Doesn't mean your 11th day is going to be net positive. Past performance is no indication of future results, but what else you got, right? 10 days in a row, in SIM, reach your goal, go live. One contract. Increase your account balance by $2,000. If you opened your account with $3,000, you want to get it up to $5,000. If you open your account with $5,000, you want to get it up to $7,000. When you accomplish that, Blueprint's going to tell you, add a second contract. And you add it with profit you earned in the market. And you just keep repeating that process. 3 contracts, 4 contracts, 5 contracts. Anytime the Blueprint says, time to add a contract, if you don't have profit available, you shouldn't be adding a contract. You only want to increase your trade size with profit you earned in the market. Okay? All right, we're going back to challenge it again. Exciting stuff, but we can't stay stuck on this chart forever. So, the Dow. Last night's alert on the Dow, 34.15. We already covered that. Russell, new all-time historic highs today as well. Last night's alert on the Dow, the Concierge alert for the Russell. The Russell was 1999, which was, let's see, yeah, right here. The alerts got out last night at 7 p.m. Eastern, so that's 1900 hours. So at 1900 hours last night, this candle, on this candle, our traders got the static report to consider being long the Russell at 1999. And it took 1, 2, 3, 4, 5 hours for price to get there. I always build time into the alerts, Concierge or Logic, for you to actually finish what you're doing, get to your computer, study the chart before you have to put on a trade. Okay, so 1999 entry. Important prices, important areas, almost always tested. So from 1999, we popped up to 2004.8. So call it 5 points at $50 a point, $250 per contract traded. Back below the trigger, second trigger, one alert, second trigger, make it up to 2017. So that's 18 points at $50 a point. It's almost $1,000. Price gets back below the trigger. See how we did a leg, a retrace, a leg, deeper retracement. That deeper retracement took us right to the BBC, bull bear cross, right? We spiked it, but look where we closed, right on top of it. Off we go again. Trigger, run up to 2038. That's almost a $2,000 per contract move. And on this pullback to the BBC had risen so much that we didn't get back below the trigger on this one. Okay, but all of our traders know what this means. We pulled back to a zone. That's an old zone. The highest weekly zone on the Russell this week. We're above it. Last night, the NQ was approaching or hit the lowest weekly zone. And then here this morning, the Russell's hitting the highest weekly zone. I can't even begin to tell you how unusual that is. So I won't even try. 2029, that's the highest weekly zone this week for the Russell. Okay. So as price was rallying up, it stopped in its tracks. Tried again, couldn't get through. When price can't overcome resistance, it goes and looks for support. It's like, calling for the cavalry. Pull back to a zone, previous zone, and the BBC, and the rocket ship takes off. That's the Russell. Next on the list, crude oil. Inventory numbers came out today, and there was an 8 million barrel miss on the forecast. We had an alert in the channel, number 6104. This initial move was worth $180 per contract traded. Then price got back below the trigger, triggered again, and this trigger has taken us up to 50.95. The entry was 50.70. So we had $180 per contract move and currently $250 per contract move. And the next zone overhead, which we expect to be good resistance, 51.20. The zone below, 49.70. When we hit that zone, consolidation, leg, retrace back to the zone, resistance going up, support coming down. Support, support. From this zone at 49.70 to 50.70, that's $1,000 per contract move. If we make it to the next zone, that'll be a $1,500 per contract move. Now the Concierge Trade Alert. Oh, hang on, Greg, I'll get your question. Let me see what it says. Putting on the 30-day for all my 4 markets as a reference just a week ago has helped me trading, has helped my trading confidence twofold. Okay, let me just keep reading. Question is, I'm planning on adding the daily to my charts. Is that a better, more comprehensive approach on my charts and trading? Okay, well, I think if you've been tuned in, if somehow you've missed what we were talking about earlier, I kind of went over that in great detail. So go back and watch it if you missed it. Okay, we've got the 30-minute, but absolutely you want to have the daily, because on the 30-minute chart, see, we knew on the daily that there was going to be an issue here. On 30-minute, you can't see that. So yes, absolutely, add the daily. Very, very important. Good question, good comment. Thank you. Okay. Okay. Okay, so we covered crude. What's left on the list here? NQ. All right. The NQ, the alert last night was to be long 12/8/30. 12/8/30. We haven't got there yet. Actually, let's see, the alerts came out at 1900 hours. What was the high here? The high was 44. So it was a $280 per contract move. Then price took a dive. The lowest weekly zone this week on the NQ is this one. This one down here, that's a previous week. So while the Russell is traded above the highest weekly zone, NQ's coming off the lowest weekly zone. I'm telling you, that is a very unusual dynamic, because the indices, S&P, Dow, Russell, NQ, they're pack animals. They trade together, you know, not in a lockstep, but they move and flow. They got the same ebb and flow to them. So very unusual. Okay, now the short side for the NQ was 12,661. So from 12,661 just down to the zone at 23, that's an $800 per contract move. Important prices, important areas, almost always tested. So after that move, price got back above the trigger, triggered again. And so from 12,661, 12,661 minus 12,491. That's 170 NQ points at 20 points. It's $3,400 per contract traded. That's what the market made available. If you're a 10 contract trader, that's a $35,000 move. Don't try to be a kind of 10 contract trader until you learn how to trade and go live with one, and use your profits to trade two, and use those profits to trade three. If you go about it any other way, now I'm not saying our way is the only way to trade the market, but what I'm talking about here, starting in sim, going live with one, using the profits to go to two, you should use that mathematical model with any strategy if you don't want to blow up your account, which I'm sure you don't, because it's no fun. No fun. Okay, we got two markets left. Gold. Gold had a rough day. Okay, last night's alert, concierge alert on gold was to sell 1948. Which happened here. Oh, actually it happened here. 2100 hours. 1948. Important prices, important areas. Almost always tested. So from 48 we dropped to the zone at 44. That is a current this week zone. So $300-400 per contract move. And then this drop. Wow. From 1948. Well, it's more than 40 points. A 40-point drop. This is more than 40 points. A 40-point drop would be $4,000, because gold, that's per contract. So it'd be 40 grand for a 10 contract trader. Gold pays $100 per point, per $1 of movement. Price goes from 1944 to 1945, $100. Okay. When silver moves $1, it's $5 grand. I'm talking the large contract. You see how price is consolidating here at this previous weekly zone? What's the most highly probable thing to happen? See how the step line is crossed over? On the way down, the step line was on the left side of red and falling. Now it's on the right side. On a short, the first green candle that closes above the step line is an exit signal. Okay? The market will actually tell you when to get out of this trade. But you can get out at any time. Take profit anytime. So the high probability thing now for gold is to rally up to the BBC, which we expect to be good resistance because we're approaching it from below. And then another leg back down to the old zone at 1910. Getting long here, that would be a counter trend trade because the trend as defined on a 30-minute chart is bearish. Why? Because price is below the BBC. Okay, and the final market, silver. Okay, the alert last night on silver was to be long 27.90. Okay, and from 27.90, we ran up to 28.10. It's 20 points. Or, I'm sorry, 20 cents. A 2-cent move in the price of silver is worth $100. The short side is 27.44. $27.44, we dropped to 26.70, so that's about 70 cents. A $1 move is worth $5,000 with the large contract. So 70% of $5,000. $3,500 per contract. That's what this move was worth if you trade it. Okay. You like what you see, you want to become a member, go to Emini Futures Trading.com. Click the button, set things in motion. Val will be in touch with you. She'll get you all the stuff you need. Indicators, charts, zones, invitation to the discussion group, invitation to the weekly trading zone channel, invitation to the logic channel, and the Concierge Trade Alert. Now, when you become a passport holder, this is for life. No recurring weekly, monthly, annual fees. One money, one time. That's it. Trading is not easy, but I don't think you'll find anything that makes it any simpler. There's no mystery, there's no mystique, it's all logical. Once you learn to speak the language of the market, once you understand how to take that engine apart, put it back together, still not easy, but it's simple. Let's go to our good word for the day. Last couple of days we've talked about the reason for unanswered prayers. Let's keep going. 1 John 3:21. Beloved, if our heart does not condemn us, we have confidence before God. The third obstacle to answered prayer is unconfessed sin. After conquering Jericho, the strongest city in the Promised Land, the Israelites were defeated by a handful of soldiers in a small village called Ai. Joshua was devastated. He tore his clothes and fell face down on the ground before the ark of the Lord. Joshua 7:6. And in Joshua 7:9, he prayed this prayer. The other people of the country will hear about this, and they will surround us and wipe out our name from the earth. What then will you do for your own great name? That was Joshua's prayer. How did God respond to this prayer? You might be surprised. The answer is in Joshua 7:10. The Lord said to Joshua, stand up. What are you doing down on your face? Israel has sinned. So what happened? Achan, one of the soldiers, had stolen some of the spoils of battle which belonged to God. Jericho was the first city in the promised land to be conquered, and God in Proverbs 3:9 said that the first fruits of all we have must be given to him. The treasures from the next 9 battles would belong to the people, but the treasures of Jericho belong to God. God doesn't need your stuff. Okay? We all know about tithes, paying our tithes, 10%. But God, who created this universe, who put the stars in their place, who tells the tide how far to come in and how far to go out, he doesn't need your money. What he needs is your faith. What he needs is for you to believe in him so that he can bless you. And when you start to get into a man's pocket, when you start to get into his wallet, wow. We're attached to all kinds of things in life. We like a certain football team, or we really love our kids, and we really love our wife, but don't mess with my dead presidents, right? So really, it's just a test of faith. Are you willing to trust God that he will provide all of your needs according to his riches and glory? So every time that paycheck comes out, God says, show me. You say you believe in me. Show me. Again, he doesn't need the money. He created all the gold and silver and the crude oil. There's a time to pray and a time to stop praying and actually deal with the sin in your life. You can't pray, Lord, what do you want to do, when you already know what to do but aren't willing to do it. Is God speaking to you right now through this devotional, through this good word? 1 John 3:21. If our hearts do not condemn us, we have confidence before God and receive from him anything we ask, because we keep his commands and do what pleases him. And that's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.